Hi, everyone, and welcome back to the channel. Today, we're diving into a super important topic investing. Specifically, how to get started with investing in 2025. By the way, my name is Krista, a certified financial coach and expert in the field of personal finance. If you've ever felt overwhelmed by the world of stocks, bonds, or mutual funds, trust me, you are not alone. But the good news is you don't need to be an expert to get started. In this video, we'll break things down step by step, so by the end, you'll have the knowledge and confidence to begin building your investment portfolio. Whether you're looking to grow your wealth, save for retirement, or just want to learn how to make money work for you, this video will help. So make sure you watch till the end because I will be sharing some key strategies that can really set you up for success. Let's jump right in. First off, why should you even consider investing? After all, it can sound risky and complicated, right? But here's the thing. If you want to build long-term wealth, investing is one of the most effective ways to do it. Inflation alone eats away at the value of your money over time, and traditional savings accounts don't offer the returns you need to stay ahead. Investing allows your money to grow through the power of compound interest, meaning you earn interest on both the money you initially invested and the interest itself. Over time, this can create exponential wealth. Let's look at some numbers. Say, for example, you invest $100 a month for 40 years with an average return of 7% per year. You'll actually end up with over $200,000. When I started investing at the age of 24, that's exactly what I did. Although I only made $40,000 a year at my job with no 401k match, I was still able to survive without the extra $100 a month out of my paycheck. After only 4 years of the company, I walked away with $20,000 in my 401k. I had no idea what stocks or mutual funds were, but I picked a few, and luckily it grew. Now that we know why investing is important, let's talk about the different types of investments you can make. I'm going to break this down into three main categories: stocks, bonds, and real estate. Let's go over each one. First up, we have stocks. A stock represents a share in the ownership of a company. When you buy stock, you're essentially buying a small part of that company. If the company performs well, so does your investment. On the flip side, if the company performs poorly, your investment could lose value. Stocks are often considered higher risk, but they offer higher potential returns, especially over the long term. The stock market can be volatile, but if you're in it for the long haul, stocks tend to outperform other investment types over time. During those same initial 4 years at my first employer, I also decided to invest in their stock. Again, I had no idea what I was doing, but when I was offered to purchase, I said yes. I took a chance on my company without even knowing how their stock would perform. When I left, I received a mail letting me know that I had over $7,000 in company stock. I had completely forgotten that I was invested in the company, and when I left, I considered this a big bonus. So, yes, I took the money out and spent it. Since this wasn't part of my retirement portfolio, I was able to do with it as I pleased. Over the years at my other company, because I had additional money to invest outside of retirement, I did the same thing. I let it grow, and I would sell my shares when I needed to do large projects such as renovate a roof or pay my taxes. Over the years, investing in the companies I was employed with have paid off significantly. Next, we have bonds. Think of bonds as loans you give to governments or corporations in exchange for interest payments over a fixed period of time. Bonds are usually considered less risky than stocks, but they also offer lower returns. They're a good option if you're looking for more stability in your portfolio. Due to my age, I don't invest too much in bonds anymore. Throughout the years, I've noticed that I don't have much of an aversion to risk. The market will do what it will, and since majority of my investments are in the S&P 500, I'll just continue riding the wave of average returns. Finally, there's real estate. Real estate investing involves buying property to either rent out or sell later at a higher price. While real estate can require more capital upfront, it can be a great way to generate passive income and diversify your portfolio. Plus, property tends to appreciate over time, making it a relatively safe long-term investment. If you watched my last video, you would see that I 100% took advantage of real estate invested in 2022 when the market had increased exponentially. This was a great opportunity for me because I had saved for a down payment and I was ready when the market was. So now that you know the basic types of investments, let's talk about how to actually get started in 2025. Here are the steps you need to follow to build your investment portfolio. Step 1. Set your financial goals. Before you invest a single dollar, you need to define your financial goals. Are you saving for retirement, a down payment on a house, or are you just looking to build wealth over time? Your investment strategy will change based on your goals, risk tolerance, and timeline. For example, if you're investing for retirement, depending on your age, you might want to go with more conservative approach like a mix of bonds and stocks. But if you're investing for the short term, like purchasing a house, you may want to stick to less risky options like bonds, CDs, or high yield savings accounts. Next, you want to figure out how much money you can actually afford to invest. I always recommend starting small. The goal here is to build a habit of investing regularly, even if it's just $50 a month. It's more important to be consistent than to invest a large sum all at once. Number three, choose your investment account. Now, you'll need an investment account. The most common options are brokerage account or retirement accounts like an IRA or 401k. If you're investing for retirement, a tax advantage account like an IRA might be the best choice. But if you're just getting started and have more flexibility, a brokerage account is a good option. With brokerage accounts, you can invest in a wide range of stocks, bonds, and ETFs. Number four, pick your investments. Once you've set up your account, it's now time to choose your investments. If you're new to investing, I recommend starting with exchange traded funds or ETFs. ETFs are a great way to diversify your investments. They're collections of stocks or bonds that you can buy all at once, so you're not relying on the performance of a single company. Another option is index funds, which are similar to ETFs but usually have lower fees. These funds track a specific market index like the S&P 500. When selecting funds, especially those in your 401k, you might not have a lot of options. Please do your research based on the fund name. That's the best way to learn about where your money is going every time you contribute. When I first started, since I didn't know anything about mutual funds, I selected the name I know best, Wells Fargo's set of funds. Although I made this selection strictly based on popularity of the bank, it worked for me, but it could be different for you. So please do your research before selecting your funds. All right, so now let's talk strategy. One of the best strategies for beginners is dollar cost averaging. This means invest in a fixed amount of money at regular intervals, regardless of whether the market is up or down. It takes the emotion out of investing and allows you to buy more shares when prices are low and fewer shares when prices are high. Over time, this helps reduce the impact of market volatility. Another important concept is diversification. Diversification is all about spreading your investments across different asset classes, stocks, bonds, real estate, and more, to reduce risk. If one investment doesn't perform well, others in your portfolio might offset that loss. This can help you build a more stable and balanced portfolio. If you own a home and a 401k or IRA, you're diversified. If you own an ETF or index fund, you're diversified as well. You don't really have to make things too complicated for yourself when investing and diversifying your portfolio. So, there you have it. Those are the basics of how to get started with investing in 2025. The key is to start small, stay consistent, and continue to grow and learn as you go. Remember, investing is a long term game. It's about patience, discipline, and letting your money grow over time. If you found this video helpful, don't forget to like, comment, and subscribe for more finance tips. And if you have any questions or want to learn more about investing, drop them in the comments below. I'd love to help. Thanks for watching, and I'll see you in the next video.